All right, getting started with an online prop firm. What is a prop firm? Basically, a prop firm gives you an opportunity to sign up for an account. You go through a challenge account, right? An evaluation. This evaluation gives you different parameters in terms of your risk to your reward, your goals, what rules you need to follow. If you follow all the rules, you hit your profit target, you then get moved into a funded account. So a funded account allows you to then take payouts, right? So you sign up for a prop firm, you pay the $100, you pay the $50, you then go through the evaluation, you pass the evaluation, showing that you have a strategy, showing that you're able to trade consistently, right? You're able to do that. Once you meet the criteria that each prop firm basically lays out for you, once you do that, they then put you into a funded account. Once you're in a funded account, you then continue to trade, you then continue to be consistent, and then you request a payout. You take real money out of the account. The great thing about this is your risk to reward, right? So you sign up for a prop firm, you pay $50 for an account. You then get access to the evaluation. You pass the evaluation. Once you're in a funded account, you then have your drawdown, basically. So you pay $50, you're able to risk $2,000, $3,000 depending on the account, and you're able to trade, build that account up, and then get the payouts. The amount of money up front that you're putting into the account, it's much smaller, right? Compared to having a personal account. Let's say you open up a NinjaTrader account, a Trade-Evade account with a personal account. You put money into that account. Let's say you put $5,000 into that account. You're only allowed to trade a certain amount of contracts because of the margin requirements. Every contract is different. Some brokers require you to have $1,000 in your account per NASDAQ contract that you're trading, or $500 in your account for the ES contract. So every contract's a little different for the margin requirement. The margin requirement basically is telling you that you need this much money to trade one contract in your account, because the broker is loaning you money basically in sense of margin to be able to trade this contract. So that's also the big benefit of trading through a prop firm, is you basically pay a very small fee up front. You pass the evaluation, you get into a funded account, and you're able to start trading larger size than you would by just putting $50 into a futures personal account. If you put $50 into a personal account, I don't think you could even trade a micro at that point. So the great thing about the prop firms is the initial investment is much smaller than the amount of money that you would need to put into a personal account to trade futures. Also, the great thing is if you end up blowing up the account, you end up, losing the money in the account. It's not coming out of your pocket. You've only paid $50 to enter into this prop firm, and you've now lost, $3,000 of the prop firm's money. But the great thing is, if you blow up, you can then buy another account, go through the evaluation again. If you've already passed it once, you should be able to pass it again. So you then go back into the evaluation, you get funded again, and you keep trading. It's really great for beginners as well, because it puts a little bit of pressure on yourself compared to just trading a simulated account where you have no actual skin in the game. When you buy a prop firm, you're actually having to put a little bit of money up front. So you know that you put some risk into it. You put $50, you put $100 into it. Okay. Maybe you reset a few times. Now you're invested $200 or $300, maybe $500, $1,000, whatever it is. And it comes to the investment of buying an evaluation, doing the resets and all that. So the prop firms allow you to really get a lot more bang for your buck when you first start out. Now, every prop firm has their own rules. They have different payout policies and different criteria when it comes to getting funded, right? Every prop firm's a little different. You can see on the Only Prop Firms website all the kind of different news and stuff that's going on. We'll talk a lot more about prop firms as we go through the course, but the big benefit here is that you don't have to put a ton of capital up front to start trading, especially when you're starting out. The nice thing as well about a prop firm is they set the rules. So you have to follow rules. You have to kind of go through the process of learning, of following the rules, being consistent, And then the biggest goal for a prop firm trader is to get to a payout. So that means you have to be consistent. And again, if you want to be a good trader, you got to be consistent, my friends. So prop firms are a tool when you're first starting out to really be able to leverage a small amount of money to get a larger reward, getting a payout after only paying a few $100s up front. So, you really got to look at it kind of like, sure, would it be better to trade your own money? Maybe. But at the end of the day, what's the risk reward? If you put $10,000 of your own capital into an account and you lose $10,000, you blow up the account, well, now you've lost $10,000. If you pay $500, for resets, evaluations, and all that, and then you get into a funded account and you blow it up, you're only down $500 compared to being down $10,000 when you have your own personal account. And the great thing about the prop firms as well is they cut you off, right? When you blow up the account, you hit the max loss, whatever it is, they're going to cut you off. So now you have to go back in and restart. And it kind of stops you from like really going and just blowing up everything, right? Losing all your money. And I think that's one thing you really need to avoid when you first start out. You want to avoid losing all your capital. It's not good mentally and it's not good financially to put a bunch of money to an account and then lose it all while you're learning to trade. So prop firms are really a great tool to leverage the risk reward in general.